Get ready for some mind-blowing insights into the crypto market. We're on the brink of a major boom, and Bitcoin is leading the charge. With Bitcoin's halving just 2 months away, the excitement is palpable. In fact, a staggering 95% of all Bitcoin buyers in history are currently sitting on profits. Talk about impressive. But let's dive deeper into the numbers, shall we? We're talking about some seriously amazing metrics here. Bitcoin ETFs are making waves, with 4 of them landing on the top 25 ETFs of all time. We're talking about heavy hitters like BlackRock, Fidelity, ARK Invest, and Bitwise. Just 1 month on the market, and these ETFs are already making history. In fact, out of a total of 5,535 ETFs launched in the last 30 years, BlackRock and Fidelity are in a league of their own, each boasting over $3 billion in assets. Now here's where things get really interesting. The inflows into Bitcoin ETFs are off the charts. We're talking about 400 million in net inflows on February 9th alone. To put that into perspective, it's the 3rd biggest inflow day for Bitcoin ETFs since their launch. This level of sustained demand is unprecedented, especially when you compare it to the historical context of ETF launches. Now let's take a trip down to memory lane when the first gold ETF launched back in 2004. Sure, it was considered one of the most successful ETF launches of all time, but check this out. In its first month, it had just 8 days of positive inflow, 1 day of negative inflow, and 11 days of zero flows. Now compare that to the explosive demand we're seeing with Bitcoin ETFs. It's a whole different ballgame. And hey, remember that post Kathy Wood retweeted breaking down all this? The success of Bitcoin ETFs is rewriting the rulebook, and the numbers speak for themselves. So if you're still on the fence about crypto, now's the time to pay attention. The future is looking bright, and Bitcoin is leading the charge. Don't miss out on this historic opportunity. Smash that like button and let's spread the word. Now let's break down the Bitcoin ETF phenomenon. It's a game changer, folks. If we take a look at the trajectory of Bitcoin ETFs compared to that of gold ETFs, it's like night and day. Now sure, gold has had its run-up and consolidation period after the ETF launch. That was then followed by a massive melt-up. While we may see similar patterns with Bitcoin, there's a key difference: the supply dynamics. You see, after the gold ETF launched, there was an increase in demand, leading to more gold mining and ultimately an increase in supply. But with Bitcoin, it's a whole different ballgame. Supply flow gets cut in half every few months, and we're gearing up for another halving event soon. That scarcity factor is what sets Bitcoin apart, and it's driving unprecedented demand. Just take a look at this chart showcasing net Bitcoin ETF flows. The black line represents the total net flows to ETFs to date, while the yellow line shows daily ETF inflows. Compare that to gold's ETF inflows and you'll see the difference. Bitcoin is on an upward trajectory and the momentum is only getting stronger. Get this, 9 Bitcoin ETFs, including GBTC, have already surpassed MicroStrategy's Bitcoin holdings in just 1 month. MicroStrategy took 2 to 3 years to accumulate that level of Bitcoin, but ETFs did it in the blink of an eye. It's a testament to the mainstream adoption and institutional interest in Bitcoin. But it doesn't stop there. With the US stock market hitting new all-time highs, there's a strong correlation between Bitcoin and traditional markets. As Bitcoin becomes more accessible through ETFs, we're likely to see even closer ties between the two. Let's not forget about Ethereum. ETFs for the 2nd largest cryptocurrency are on the horizon, and Wall Street is eager to get in on the action. So, if your portfolio isn't heavy on Ethereum, you might want to reconsider. According to analysts, Ethereum ETFs could be the next big thing, and those who miss out will have no one to blame but themselves. Now it's an exciting time to be in the crypto space, and ETFs are just the beginning of a new era of mainstream adoption. Now we've been doing some deep thinking, and we truly believe that Bitcoin, Ethereum, and a whole host of other top-notch crypto projects are gearing up for some serious gains. We're talking new all-time highs, possibly even within the next year. The US crypto scene is on the brink of a major boom, and each and every one of us in the crypto community stands a real chance of achieving financial success beyond our wildest dreams. Here's the catch though. There's a potential roadblock looming on the horizon. Enter Elizabeth Warren's Digital Asset Anti-Money Laundering Act. Now we don't want to sound alarmist, but this bill has the potential to throw a wrench in our crypto aspirations. Now what exactly does this bill entail? Well, to break it down for you, we recently tuned into an eye-opening conversation between crypto journalist Rachel Wolfson and Perry Ann, the CEO and founder of the Chamber of Digital Commerce. Their mission is to advocate for positive Bitcoin and crypto regulation. Perry Ann laid out the stark reality. Elizabeth Warren's bill, if passed, could effectively spell doom for the crypto industry in the US. You see, while the bill doesn't outright ban cryptocurrencies, it's a sneaky piece of legislation that aims to subject crypto entities to the same stringent financial reporting requirements as traditional banks. It's like trying to fit a square peg into a round hole. It just doesn't work. Crypto operates on a fundamentally different framework, and trying to regulate it in the same way as traditional finance is a recipe for disaster. Now, this act isn't just targeting big crypto exchanges or corporate entities. It's taking aim at the very heart of decentralization, including self-hosted wallets. Now imagine your trusty self-hosted wallet being slapped with the same regulations as a big bank. Now let's not forget about the Bitcoin miners and node validators. These folks are the backbone of the crypto ecosystem, yet this bill wants to subject them to the same financial reporting requirements as traditional financial institutions. Now here's the kicker. If you're mining Bitcoin or validating transactions, you don't have access to the personal information of the transactions you're processing. It's like trying to squeeze blood from a stone. It's just not gonna happen. So what does this mean for the future of crypto mining in the US? Well, if this bill were to pass, it would effectively sound the death knell for legal Bitcoin mining businesses in the country. The same goes for self-hosted wallets and node validators. It's like a backdoor ban disguised as a regulation. Now you might be wondering, what's the official name of this bill anyway? It's the Digital Asset Anti-Money Laundering Act, Senate Bill 2669. But here's the good news. We have the power to make a difference. By spreading awareness, voicing our concerns, and rallying together as a community, we can ensure that Elizabeth Warren's bill never sees the light of day. So, share this video, spark conversations with your friends and family, and let your voice be heard. Crypto has the potential to revolutionize the way we think about money and finance, but only if we stand up and fight for it. The crypto market is heating up, and there's still plenty of opportunity to make some serious gains. If you're interested in diving deeper into the world of crypto and staying informed about all the latest developments, then consider joining us. We post new videos every day, keeping you in the loop on everything crypto related. And that's it for today's video. Have a good day.